Welcome back to Crypto Macro Insights. I'm Maya, and today we're looking at Bitcoin on August 21st, 2025. Tom, we've seen some interesting movements since our last episode. Bitcoin is sitting around $114,000 after touching those 120k levels. What's your read on where we stand right now?
Thanks, Maya. It's fascinating timing, actually. Yesterday we were at these highs, and now we're seeing this 5 to 10% pullback that has the community quite nervous. But when you step back, we're still up 17.6% over 6 months, which is remarkable performance. Today I want to walk through 3 key areas: the social media sentiment, macro fundamentals, and what this means for trading over the next 4 weeks.
Perfect setup. So what's the mood like in the crypto communities right now? Are people panicking about this pullback?
The sentiment is really interesting. I'm seeing headlines like Bitcoin crashes to 113k, which shows how spoiled we've become at these levels. People are genuinely concerned about what they're calling a crash, but it's really just normal volatility. The discussions are split. Some see this as a healthy consolidation, others worry about deeper losses. What's notable is that altcoins are again underperforming Bitcoin, showing that flight to quality dynamic.
That altcoin rotation is telling. But are people talking about any specific macro drivers, or is this more general fear?
There's definitely macro awareness. People are connecting Trump's tariff policies to inflation concerns and potential economic slowdown. But here's what's encouraging: there's still strong discussion around institutional adoption. MicroStrategy's leverage strategies are being analyzed extensively, and the community seems torn between short-term volatility fears and long-term institutional confidence. The dollar weakness is also being discussed as a positive for Bitcoin.
That dollar weakness point is crucial. Let's dive into the hard macro data. What are the key indicators telling us right now?
The macro picture is really the key story here. The Fed is still holding rates at 4.33%, unchanged for 6 months, which remains quite restrictive. But here's where it gets interesting. Real yields are actually declining, down 2.5% over 6 months to 1.95%. That means the inflation-adjusted cost of holding non-yielding assets like Bitcoin is getting cheaper. Meanwhile, the dollar index has weakened 5.2% to 120.76, which historically supports Bitcoin prices.
Those are both really Bitcoin positive factors. What about liquidity conditions? That's often the make or break factor for risk assets.
Liquidity is the real story here, Maya. The reverse repo facility has collapsed 49.3% over 6 months to just $35 billion. That's money flowing back into the financial system, which is typically very positive for risk assets. At the same time, money supply M2 is growing modestly at 2% annually, so we're not seeing massive monetary expansion, but steady growth. The VIX is sitting low at 15.57, suggesting markets aren't expecting major volatility.
So we have supportive liquidity, dollar weakness, falling real yields. Are there any warning signs in the data?
There is one yellow flag. High-yield credit spreads have widened 4.3% to 2.90%. That's the extra yield investors demand for corporate bonds over treasuries, and it suggests some risk aversion is creeping into credit markets. It's not alarming yet, but it's something to watch. The yield curve has also continued to normalize, with the 10-year, 2-year spread now positive at 0.55%, which historically signals the end of recession fears.
That yield curve normalization is significant. Now looking ahead, what major economic events should we be watching over the next few weeks?
It's actually a relatively quiet calendar ahead, which could be positive for Bitcoin. The next 2 weeks don't have any major Fed events or FOMC meetings. We have some Chicago Fed indicators this week, and early September will bring the ADP employment report and other labor data. That's actually the next major risk event. If we see unexpectedly strong employment numbers, it could reinforce Fed hawkishness. But for now, the calendar gives us breathing room.
That quiet calendar is indeed helpful for consolidation. So given everything we've discussed, the mixed social sentiment, supportive macro backdrop, and calm calendar, how do we trade this over the next 4 weeks?
I'm favoring a range trading approach as the base case here. With all these mixed signals, I see Bitcoin likely consolidating between $108,000 and $118,000. That's my 45% probability scenario. For this range, I'd enter longs around the 108k to 112k zone with tight 3% stop losses and target the 118k to 120k area for about 8% gains. I'd use moderate position sizing at 40% of capital for this base case.
That sounds reasonable for the consolidation scenario. But what about the bullish and bearish cases? What would trigger those?
The bull scenario, 35% probability, gets triggered if we break sustainably above 115k, especially if the dollar continues weakening below 120 or we get dovish Fed signals. In that case, I target 125k to 130k with a larger 60% position but wider 5% stop losses. The bear scenario, 20% probability, kicks in below 106k, likely from hawkish Fed surprises or major macro shocks targeting 95k to 100k. Key adjustment rules. If dollar index breaks above 125, I turn defensive immediately. If VIX spikes above 25, I reduce all positions regardless of scenario.
Those trigger levels are really important for risk management. Tom, if you had to pick just one thing for our listeners to watch most closely, what would it be?
Without a doubt, watch the dollar index. It's been the primary driver lately, and if it continues weakening toward 120 or below, that could really fuel the next Bitcoin leg up. But any sudden reversal above 125 would be my signal to get much more defensive. The dollar-Bitcoin inverse relationship has been remarkably consistent, and with all the liquidity coming back into the system, currency dynamics are going to be crucial for the next move.
Tom, this has been incredibly insightful. So to summarize for our listeners, we're in a consolidation phase with supportive macro fundamentals but mixed sentiment. Range trading between 108k and 118k seems most likely, but watch that dollar index closely. Thanks for the comprehensive breakdown, and to our listeners, remember this is not financial advice. Always do your own research and manage risk carefully. We'll be back next week with fresh market insights. Until then, stay informed and trade safely.